0.7%, China down 2.3%, in Europe, London session down 0.4%, Frankfurt 0.7%. As far as the futures market, the Dow is down 0.3%, S&P is down 0.7%, and Nasdaq 1.2%, and crude oil is down 1%. So as far as news in today's calendar, we had personal income outliers, unemployment cost index today coming out at 8:30. I took a look at these numbers before I start, and they came in line with the expectations. Market had a little bit of a reaction to it, but we brushed that off, and now we're pretty much trading at the same pre-report levels. At 10 a.m., we have consumer sentiment and pending home sales. So be careful, be cautious of that, guys. Those are two big reports coming out at 10 p.m. And that's pretty much it. Post-bill today, we have some earnings reporting coming out. I believe not really all the big names. The big names in tech came out yesterday, but we still have a decent sum of earnings coming out today after the bill. But with that being said, Twitter yesterday Elon Musk closed the deal. Finally, he closed the Twitter deal, acquiring the company for $44 billion. Let's see how that company shapes up now. But finally, that deal's in place. Twitter shares rose after the closure, so that's good for Twitter. As far as tech, yesterday, if you guys didn't know, Amazon and Apple both reported earnings after the bill, and Amazon took a huge hit. I believe we're down 12.7% after that report. Amazon had a huge mess on sales and earnings. Let me take a look here, give you guys the numbers. I can't really find the Amazon number. It's anyway. It recorded its weakest growth on record. So this is substantial. That's why it plunged over 12.7%. That's a lot. As far as Apple actually beat expectations on both the earnings per share and the revenue. It came down 4% yesterday. I believe close to 5%. But like we managed to brush that off, and now they're pretty much rallying. Other than that, as far as real estate, 30-year fixed rate mortgage average 7.08% now. This is pretty high for real estate markets. Cost of borrowing has gone up significantly in the last year, and this is really just pushing against the market. The developments, according to Freddie Mac, the developments are starting to cool the real estate prices down. Of course, like with the 30-year mortgage sitting at 7%, like who really wants to, get involved in that market? We're gonna see how that develops, coming into this coming year. I think real estate will have just more downside, slow downside, unlike the markets, but like will have a decent downside. As far as the Fed is raising and increasing rate hikes, real estate is gonna be taking a hit slowly. As far as the S&P market, last time I came here to do the update for you guys, the S&P was working its way up into 3885, 3900 level. That was the big resistance that I was talking about. Ever since we touched that level, really, it's just the market has turned down significantly. I believe we're trading 3760 right now, over almost 100 points, 110 points from that level. So just keep that level in mind. As far as today level, 3832 to 3836 is the big level. Also for as a resistance. For the support, you have 3760 is sitting there as a support, and above that 3780. I think that the downside that we witnessed like overnight and pre-market, a lot of it came from the earnings that came out yesterday. Markets are really pricing that in, and we'll see what today's morning session brings. Let's see if we have more volatility and more movement in today's market. Other than that, like can't really find any more significant news here that will be, worth it for you guys. But yeah, pretty much that's all I got. Let me go turn up these rooms, and if you guys want to learn more about our setups, our trading strategies that we use in the room, join us at Trade Pro Academy, and I'll see you guys on Monday. Ciao. Take care.